Hello and welcome to The Road to Autonomy. I'm your host, Grayson Brulte. The Road to Autonomy is brought to you in part by Stantec Generation AV. Stantec Generation AV combines some of the most experienced AV experts in the industry with the resources of a global engineering firm. Stantec Generation AV provides education, consulting, assessment, and guidance to any industry interested in autonomous vehicles. Learn more at stantec.com. Hello and welcome to The Road to Autonomy. I'm your host, Grayson Brulte. On today's episode, we're absolutely honored to welcome Sergey Litvinenko, co-founder and CEO of Koop Insurance. Sergey, welcome to the podcast.
Thank you, Grayson, for having me. I'm super excited.
I'm excited to have you here because without insurance, there are no autonomous vehicles. Without insurance, autonomous vehicles do not scale. Very simply, there is no business for autonomous vehicles without insurance. You're in the insurance business. You've got a really great startup. What is Koop Insurance and why did you co-found the company?
Absolutely. Let me first start with Koop Insurance. So we are an insurance technology startup that's focused on everything automated. We focus on fully autonomous vehicles that go on public roads like robotaxis and trucks and shuttles to off-road applications in robotics, in agriculture, construction, mining, warehousing, manufacturing, and aerial use cases. So really what we're trying to do, we're trying to be the go-to insurance solution for everything autonomous and automated. We built this platform, which is the underwriting platform that allows us to pull data from those vehicles and robots, and we use that to do some really differentiated underwriting analysis. And on the back of that, we issue the insurance policies that protect our customers against many types of risks. Really, the problem that we're trying to solve is that the way insurance works today hurts and sometimes even prevents the adoption of automated products and services, and that doesn't help the industry of autonomous vehicles and robotics. We're big believers in the market, and we think the market is going to grow. When you define automation broadly, there are thousands of companies just in the US working on those technologies. And we're based in Pittsburgh, early stage company, but growing really, really fast, have venture backing. And myself, I come from the banking background. So I have a different angle and experience, which gives me an ability to bring fresh perspective to the insurance industry. That's a little bit about Koop. Why did we start Koop? So we didn't start Koop overnight. It was a journey to get to where we are today. Originally, we started in the traffic safety space, and our first project was about building the smart dash camera that would identify all kinds of traffic violations on the road, and you'll be able to capture that and then report that to the police in a decentralized fashion. So we wanted to pretty much eradicate traffic accidents by letting people be the law enforcement. There are lots of privacy and governmental implications coming out of that, but it was a start. And then we took this concept and some of the tech that we built and applied it to the autonomous vehicle space, which led us to the insurance, which we figured was, I would say, totally unprepared for the world of autonomy. And we took that technical approach and built the insurance operation around it. And now you have Koop Insurance.
Insurance markets move at glacier speeds. Trying to get home insurance or car insurance, it's not a fun experience. It's a cumbersome, hard experience. There is, if you need small business insurance, Aon's CoverWall is fantastic. To me, that's a really great example of insurance innovating. But you're innovating a very hard problem, ensuring autonomy. What are the benefits of your underwriting platform?
So there are three key benefits. The first benefit is availability. So if you work in the autonomous vehicle space, off-road or on-road, you go to Koop Insurance and you know that we have products for you, so you can rely on us. If you have a broker who is representing you, brokers usually go to many different insurance companies, and for the most part, they get frustrated when everybody declines any given risk. You can count on us that we will be able to insure those use cases. That's number one. Two is the convenience. So the advantage that we have is that we have an in-house software engineering team, and we build everything ourselves, and we use everything that we built. So we have the internal underwriting platform, we have the broker tool that our brokers and agents use, we have the customer tool, we have the API. Everything is in one place. As a result, we move fast, We eradicated a lot of friction from the insurance transaction, and our customers benefit from short quote and binder turnarounds to having some convenience features like generating certificates and managing their coverage and having visibility into the data that they share. All of that comes with Koop. And thirdly, it's the price. So we're not always the cheapest option because we have a high quality offering. But when we have enough data, most of the times we provide you with the best quote that you can find on the market. And usually it's a result of great safety engineering that our customers do. And we definitely have a way to calculate that. And definitely, if you are a customer of Koop Insurance, you can count on the fact that you will be priced appropriately for your use case. And most of the time, you'll be priced the best out of all options. So it's availability, convenience, and price. And those are the benefits that you can expect from Koop Insurance at any moment.
You stepped into something here. Not always the cheapest option. Cheap insurance is bad insurance. I'm a customer chub. I pay 2, sometimes 3x more than the other ones. But my wife has a great saying. She calls it sleep at night insurance. Something happens. Mr. Greenberg and the Chubb family will be there for you because of the quality of service. You want to have really good, high-end quality insurance, especially if you're launching some of these vehicles. And I'm going to give round numbers here, not pegging it on necessarily one company, but $300,000 to $500,000 per vehicle. There's a lot, and then you're operating without a driver. There's a lot of risk there, and you want to have really great insurance. As my wife says, you can sleep at night when the vehicles are cruising around the city. Sergey, the insurance markets. There's a lot of insurance markets. There's inland marine. There's home. There's auto, and then there's autonomous vehicle, which is let's call it a small niche, but it's going to become a very growing niche and become a very large line in the future. What is the current state of the insurance market as it relates directly to autonomous vehicles?
Well, it's tough. And there are a couple of things about it. So the first thing, it's very limited. It's a handful of insurance companies in the US and some in the UK that are taking a look at the autonomous vehicle space. And they are quite inflexible because they do not fully have an ability to understand the risk. It's also what I call it, what they come up with, it's a patchwork of short-term fixes to the long-term problem. So yes, you can take an existing auto product and you can do some endorsements and exclusions, so you can tweak the rate. But at the end of the day, it's the same old policy. There is nothing new about it. And when you have autonomous vehicle companies ready to deploy thousands of vehicles and the risk all of a sudden becomes meaningful and big enough on its own, you're going to end up in a situation where you just cannot service that particular market and you're going to miss out. I can draw a parallel, like similar thing, if I remember correctly, almost happened to Lyft, because when Lyft went public, and it's, by the way, public information, they were as much of an insurance operation as a ride-hailing operation because they had to carry all the risks themselves because it looked like they couldn't find the insurance partners to share that risk. And only later on, I think like 5 years later, they found the partners to help them. Or another parallel is that, well, how can you have literally 5 cyber insurance unicorns in an industry that's supposedly dominated by Travelers and Chubbs and Liberty Mutuals of the world? Because the insurance companies were not able to capture that opportunity when the need was there. I'm afraid the same is going to happen to autonomous vehicles. If anything, it's kind of already happening, and we're trying to fix that as soon as we can. Maybe if we dig a little bit deeper and say, well, why is it happening with autonomous vehicles specifically? I think if you dig really deep, you'll realize that the main bottleneck why the insurance industry is not able to innovate at the moment is because the insurance industry cannot get the data that will allow them to build the insurance products around the autonomous vehicle risk. There are certain legal aspects of the insurance policy. Well, that, okay, you're responsible for this, or you're responsible for that. That's like one aspect of the insurance. But the rating aspect of the insurance comes from understanding the risk profile of the fleet. And for that, you need data. And to get the data, you need to have a way to pull the data from the vehicle, right? And that's a big, big hurdle for the industry. That's also something that we believed we solved at Koop Insurance. But overall, I'm bullish on the insurance industry, primarily because we have a clear way how we can solve lots of those problems. And, we're not alone in this space. There are insurance companies which are very forward-looking, who either partner with us or looking to partner with us. And I'm pretty sure that those insurance companies will be leading the way when it comes to the autonomous vehicle space. So I'm genuinely excited about the next 2 years.
You're not the only individual that runs a company who's bullish on the insurance industry. Warren Buffett, Berkshire Hathaway, that's a giant insurance operation if you really, but they're making the money on the float and they're doing well with it. As you get more data and you share the data with underwriters, will the underwriting capacity eventually expand? Will there be more capacity in the market as more data comes into the market?
Oh, absolutely. That's just how the market works. I can tell you that right now, if you go out there, let's say you go to US insurance companies, so you go to Lloyd's of London and you go to a reinsurance company or the carrier and tell them, hey, I want to insure autonomous vehicles, give me access to your balance sheet. It's not going to happen. You need to have an edge and you need to have a well thought through go to market plan, how you're going to do that. So what we think is going to happen, and specifically as it pertains to Koop. So we think that in the next 2 years, as we gain volume and show underwriting profitability, we think that our profitability is going to be really, really good, much better than the industry averages. As a result, that is going to attract capacity. With that capacity is going to be competition coming in. And then 10 years later is going to be compression on the rates and, the pressure to, I would say, take into account the fact that the autonomous vehicles are going to be so profitable that you'll need to start go down a little bit on the rating side. And then the cycle is going to go into it's going to be the hard market where, the rates are tough to get. It's going to be the soft market and, it's going to turn into that big niche by itself. But until that happens, I think Koop is going to collect all the abnormal returns from this market segment and capacity will definitely follow.
Do you view the growth of Koop that you described because of your risk pricing algorithms where you're going to be able to limit your risk? Is that where you see that being the growth driver?
So our growth driver is twofold. So we grow by selling insurance. So right now we sell the off-road products that we built in partnership with Lloyd's. And we did develop a proprietary underwriting methodology that looks at the technical specs of the system, that looks at the exposure data and the performance data from those vehicles and robots. And so we put out certain limits, limits that usually attach to the insurance policy. But the way we control the risk is by having a really in-depth understanding of what's going on. And we call it risk engineering. So we have customers where we collect data daily, and it's very granular data. So at any point in time, we have a good understanding of how much risk that we carry from the exposure perspective. And we can communicate with our customer and tell them that, hey, we're seeing a concentration of abnormal events in this particular ODD, in this particular location, or we're seeing these patterns. And as a result, we can get ahead of something bad happening. And that's the way how we control for the risk. Of course, we will not underwrite every single company that operates in the automation space because there are certain types of companies that we don't want to be our customer for because we have certain underwriting guidelines. That's also how we limit the risk. And if we have questionable risks, we would also deploy, we can also price them appropriately. If we believe that this is more than we can take on, we would adjust our pricing to reflect that risk level. So there are many different ways in the insurance that you can go about managing your portfolio and managing the level of risk that you carry. And we, of course, deploy all of those. But I would like to highlight risk engineering specifically because with the software that we built, it allows us to do that pretty efficiently.
You're operating and functioning as a market. Lloyd's of London focuses as a market. Let's dive into this. I'm really curious. How did you develop the underwriting algorithms and what have you learned from underwriting autonomous vehicle risk? Are your algorithms getting smarter and smarter? What have you learned?
Oh, yeah, absolutely. So two things here. First, conceptually, our underwriting methodology has roots in traditional classical auto underwriting. So, for example, telematics, right? Pretty much every insurance company today has a telematics offering. And what telematics does, they track your driving behavior, and based on how you drive, they can predict the losses. And that tended to be a very powerful tool for the insurance companies. So philosophically, we do the same, but for autonomous vehicles. So now the technical component is that we do it differently compared to traditional telematics approach. So we developed our own risk assessment methodology specifically designed for autonomous vehicles on road and off road. And in that methodology, we define certain metrics and certain rating mechanisms, how we rate autonomous vehicles. And they're based on certain data fields that we pull from those vehicles. And those data fields explain the exposure and the performance of fully autonomous vehicles. And they are different from the data fields that telematics companies collect from human drivers. And the way we collect that data is also different because we do not need to partner with a telematics company. We need to partner with a developer or an OEM, and we just need to get access to the vehicle itself. And the vehicle is driving around, collecting all of the data that we need. And then it's either cellular connection that we pull the data from, or it's the Wi-Fi connection when you go back to the depot and you plug a vehicle or like a cable or the Wi-Fi, and it gets offloaded to our cloud. And we look at that data right away, pretty much on a near real-time fashion. And then with that data, we produce the cost of risk estimate from our customers. So we estimate it on a daily basis. And then we also produce the scorecard that tells us what that drives the insurance rating. And the biggest thing is that when we look at all of those data points that we collect, we try to understand what we call them non-loss events that happen to the fleet. So as you might know, claims happen rarely, and it's very hard to look at one claim that you had for your fleet and then try to extrapolate this into the future. However, there are lots of non-loss events that happen that can give you an idea about what the distribution of the risk is across different parts of the geofence or the ODD. And that, when we layer that on top of the other data sources that we have, that gives us a pretty good idea about what the risk is for an autonomous vehicle fleet. So with Koop, we can calculate the cost of risk continuously, and we're not reliant on the historical claims performance, which is a big deal for the insurance industry. And I believe this is how insurance is going to be done, not for fully autonomous fleets, but also for partially automated vehicles in the next 5 to 10 years. So we can get really, really granular, like maybe down to a given ODD or geofence, or even a certain route in terms of assessing the risk in that particular location. So we're pretty happy with where the methodology stands as of today. And we also have traction, meaning that it's actually deployed with real autonomous vehicles, and we're seeing some promising results.
What you describe is the next logical step in insurance. Even if it's an SAE level 2 or 3 system, you can price the risk knowing this vehicle, I'm going to give broad numbers, say 2 times a day goes around the bend, and historically it's a very prevalent crash area. You're going to have to price for that risk just based on historical data. What you're doing will have a lot of benefit for even human drivers that are driving the systems, especially, and benefits for your level 4 systems when you get there with your customers that you're currently underwriting. In order to do this, you have a partnership with Lloyd's of London. You recently visited Lloyd's. You had that great photo that you put on your LinkedIn page. What was it like when you first approached Lloyd's of London to say, oh, hey, by the way, I'm Sergey, I'm Koop, and I got proprietary underwriting algorithms?
Well, a little bit about our trip to London is that that photo that you saw, there was a bell, right? And historically, there are underwriters sitting at the Lloyd's of London. It looks like a huge trading floor. And historically, Lloyd's started with insuring ships, right? And every time a ship would sink, they would ring the bell. And I believe that this bell that they have right there was recovered from one of the ships that got into the trouble. And they, I think, recovered that bell and put it in there as a sign of business, as a sign of times. And they also have a book where they actually by hand write all of the ships that they insure. And it was pretty spectacular. So, but yeah, we have a partnership with Lloyd's. So our journey with them started back in 2021 when we participated in their innovation lab. And that's where we demonstrated our underwriting platform. And we also showed the demo of the claims tool that we're working on, which we think by itself could be $1 billion business, in my opinion. And that was a really great start. So, the audience was fired up, great questions, and that how we started our journey there. And then we were, I would say, lucky that we found the right people at the right time. And that led to the creation of the product, which we actively sell right now to the off-road space. It's called the Singularity Package, named after the Singularity platform. Singularity meaning the convergence between humans and machines, and broker universe. You used to have the space theme going. And, it's pretty much a combo of a general liability, product liability, errors and emissions, and a little bit of cyber, and that we sell to the off-road space. And we can slice and dice the coverage in many different ways. We use our underwriting methodology to rate it, And the adoption so far has been really, really good. Keeps us very busy. Lloyd's is a great place to start because Lloyd's has appetite for new kinds of risks. And I would say it's a very special place for the insurance industry overall. And that's where new things originate and scale. And then kind of, you can spread into the different markets and locations and the rest. Lloyd's works a lot with the US. So, for us, it's not much different. It's like working with a US counterpart. They know the market really, really well. And it was a pleasant experience with this organization so far.
Lloyd's is iconic. It's the home of insurance. It's iconic. And in insurance world, brokers, they play a large role. You mentioned the old story about the brokers at Lloyd's when the ships will go down, who's going to insure the cargo. You recently introduced Broker Universe. And I want to read a quote that you gave in the press release. In announcing the platform, you say the following, and I quote, "We built the Broker Universe knowing how much impact automation has on the risk landscape and that insurance brokers must adapt to capture the tremendous growth happening in this class of risk. AVs are going to scale. New risks are going to emerge. How is Broker Universe working with insurance brokers to ensure that their clients are properly insured for that risk?"
Oh, absolutely. So Broker Universe is important not only for our business for growth, but also for the industry to have this as a reliable option that brokers and agents can always go to if they have a customer in autonomous vehicle or general automation space. So it's actually pretty simple. So we act as an underwriter, we have our insurance coverages, and brokers have a dedicated platform that they can go to. They can select any product they would like. They can put in some basic customer information and get a quote right away. And if that quote qualifies, then we can go on and get the full insurance policy out. It's automated, it's very transparent, super easy to use, and we dedicated lots of efforts to making sure that brokers have everything they need in one place. There are more than 500,000 brokers and agents in the US. And you can have people like having one account here, one account there. Some companies might have multiple accounts. And our goal is that no matter if you are like a single agent or if you're a big insurance brokerage, we want you to go to Koop if you have a customer in the robotics or automation space. So far, the feedback was really, really good. So both on the UI and UX side and also on the quality of the product side. And we expect to double down on that this year, particularly. I would say that brokers play an important role for the insurance industry because they drive the business. And it was logical for us to go from the direct channel, where originally we started going directly to customers and presented them our solution, to now switch into this channel where we can grow faster and also let the brokers do what they do the best, meaning winning customers and selling their services. And we're going to do what we do best, which is underwriting new types of risks and doing this in a very efficient manner.
Is ease of use of the Koop platforms one of the key selling points?
Oh, yes. If you know that you have a tool that you can go to 24/7 and you don't have to talk to anybody, and you know what data you need to provide to get a quote indication, that's a game changer. There are big companies, I would say unicorns in the insurance space, that built a very successful business just around eradicating friction between underwriters and brokers. And for us, it was really important to deliver that experience as well. So convenience is huge, especially when you have customers that have some burning needs and they need to get covered and they need to turn it around really quickly. That is when this thing becomes crucial, and brokers realize that, and that's why they adopt it.
Convenience sells. If you look at it from a mobility AV perspective, why are AVs scaling? Because they're convenient. Convenience sells. That's what the consumer wants. You want to go into Amazon and buy something, you want it there today. It's convenient. Well, it's convenient. There's risk. What are some of the biggest risks, in your opinion, faced in the AV industry?
So from the insurance perspective, I can tell you that we always go into lose sleep over an outsized claim. So if, let's say, it's something that's many standard deviations over the bodily injury, property damage, or both, that's something that's always going to be a risk, not only for the autonomous vehicle space, but in general when it comes to insurance. So it could come from a long tail event, something that we didn't model for, or it could come from lots of short tail events that happen at the same time. And one thing that we are paying extreme attention to these days is specifically what we call cyber on the edge. I don't know if you follow the automotive industry, but there are lots of reports coming from different sources across the world where hackers now are able to hack individual vehicles and take control over your steering and braking and acceleration. And that's scary. And what we need to do as the insurance company, we need to make sure that we have our underwriting methodology properly looks into all of those risk points, and also that our risk engineering engine is tailored to that so we can provide feedback to our customers so they can improve on that. So that's one big deal. Protecting day-to-day operations is a given, but the long tail is what can get tricky. So I would say when it comes to the autonomous vehicle space, we pay lots of attention to that.
At Davos today, Christopher Wray, head of the FBI, gave a talk on a panel, and he talked about the cyber risk to autonomous vehicles as something the FBI is looking into and actively monitoring from a potential terrorist situation. Yeah, he's the head of the FBI. It's a very credible source. What does that do to your risk perspective as your algorithms? Do you have to incorporate that in as well?
So we already have a cyber component when we look at our customers. I would say there's definitely room for improvement in terms of how granular we get. When it comes to what you just mentioned, I think my first knee reaction to that would be, well, buy more insurance, buy better insurance. We're out there for you. We understand the risk. We have the way how to evaluate it. You don't want to end up in a situation as an autonomous vehicle company, developer or operator where it's not enough. So I would say one way to handle that cyber risk is to be properly protected, which we can deliver for the industry.
Goes back to sleeping well at night. You want to have really great, high quality insurance. Not only do you want to have high quality insurance as a consumer, and you and I have both been in several autonomous vehicles, where passengers, you want to have a really great experience. We recently wrapped up CES 2023. You took several rides in the Motional Iconic 5 AV. What did you think of the experience? I'm really curious because I was only in the original BMW ones when they were still mostly running the Aptiv software and hardware. What did you think of the new Motional Iconic 5 AV experience?
Yeah, I tried to catch that one for some time. So first of all, I use the Lyft app. It was really nicely integrated. It just pops up in front of you. You click it, and then you can open the doors from the Lyft app and start the ride. So really, really nice. So I was at one hotel in Vegas in the pickup zone, and when I ordered the ride, there were 3 Ionics lined up, and I went to the wrong one and just drove away. So when I got to the right one, the first thing that I really liked is just Ionic itself. The vehicle itself is really spacious and very comfortable. It looks small on the outside, but it's enormous on the inside. I don't know how Hyundai did it, but kudos to them. And just, very high quality materials, just a great car. That's number one. Number two, I had 3 rides at CES with Motional, public rides, and they were really, really good. So 0 disengagements. The vehicle is extra cautious. And this is not only what I noticed with Motional, it was also I remember with Waymo, with their Chrysler Pacificas in Chandler, is that when you go to the drop-off zone and you have a bunch of cars and a bunch of people running around, vehicle would take a little bit longer maybe than a human driver to do a drop-off because, the vehicle needs everybody to clear to reach the destination point. And I remember it was a similar thing with Waymo when we were, I think, at Home Depot or Costco on a parking lot, and there was just just a crowd of people, and the vehicle was just standing there waiting for them. And it's it can get a little bit when you just sit there, and as a human driver, you would have the natural tendency just kind of go and push it into the crowd a little bit. But with a robot driver, I think I really appreciated the fact that the vehicle was cautious, even though it was not the fastest drop off that I had. So overall, I'm very bullish on Motional. I'm really looking forward to when they're going to launch and pull the driver. And I do think that they have a great market. Like Las Vegas is a prime location for something like this. And I'm looking forward to doing only Motional in Vegas when the launch across all of the casinos and hotels, and not looking forward to going back to the regular ride hail. But that's me. So
we all want AVs. Motional was very wise, in my opinion, to choose Vegas as their launch market. Zoox is following at some point when the Zoox vehicle comes out. That's going to launch in Vegas. But I follow markets a lot, as our listeners know. When you look at markets, you turn on the financial news, you read the financial papers, or for that matter of fact, just read the LA Times, the New York Times. It's cruise Waymo everywhere you go. Little to no mention of Motional. Why do you think that is? Because I want to go back in the Wayback Machine here when Carl and the team were operating Autonomy in Singapore. They were getting a lot of press then. A lot of press for what they did in Singapore, the first to get the AV license. Now they're Motional. There's hardly ever mentions of them.
Great question. So I have a little bit different experience because in our circle, Motional gets mentioned a lot. And we're based in Pittsburgh, so we're more of the East Coast people. I think the reason why Cruise and Waymo get the headlights is because lots of the investing community is concentrated in Silicon Valley, and that's what they see, and that's what they talk about. But I think that's going to change in the near future, especially as not only Motional, but other companies as well go to, as they form their marketing budgets. I think we're going to hear much more about Motional in the near future. So yeah, I think it's miscellaneous reasons. But media, I mean, we can even have the whole conversation about media and how they represent autonomous vehicles. But media is not always the right outlet to follow the progress of the industry, in my opinion. So
you're right. You're 100% right. Headlines, they make these crazy cockamamie headlines that drive ad sales that hurt our industry with little to no understanding of the media. You mentioned in the investment community. Analysts, they're divided on how to value autonomous vehicle companies. I want to give you two stark examples from two well-known analysts. You have Adam Jonas of Morgan Stanley. He's assigning a value of $0 to Cruise and GM's valuation. You have Joseph Speck, hey Joe, of RBC Capital Markets, assigning a $10 per share value for a total valuation of $18 billion. Joe's a smart guy. Adam's a smart guy. I think Joe's smarter, but who am I to judge? Why do you think there is such a stark divide in the market when it comes to pricing autonomy?
Great question. So I'll try not to judge anybody because that's not of my business, but I'll just give my opinion. I think assigning $0 to Cruise is absolutely ridiculous. You have to be out of your mind. I would say that there are layers to it, to understanding how the whole thing works. First, you need to start with understanding the state of engineering and the state of the product. Once you understand that, then you need to understand unit economics. Once you understand unit economics, then you need to understand the go-to-market motions. And once you do that, only then you can assign the valuation to it, or kind of do the present value of cash flow analysis. That's what they do on Wall Street. I was there, so I know. And I think I would assume that if you assign $0 to Cruise, you probably have no idea what the state of engineering and the state of the product is. And it might be a contrarian take, but in my view, in the next 10 years, Cruise itself could be worth more than the rest of GM combined. So it's a great move for GM to have Cruise because it could drive more than 50% of the revenue for the company in the near future. I would say at the same time, it's a little bit hard to get to the exact numbers in terms of what the value of the company is. I think we're at the point where we're just starting to understand what the go-to-market is. So I think the engineering is there, the product is there. I believe unit economics are there, even though a lot of people do not agree. And now it's about the go-to-market. And I would say give it a couple of years, maybe till 2025, when you see autonomous vehicle services popping up in all major US cities, then you can use that experience to extrapolate this into the future and tell you how much of a price per share it can add on. But I can tell you that very tricky with the autonomous vehicle space because you have to have this really good understanding of the fundamentals first before you can assign a value. And anybody that assigns $0 to the autonomous vehicle companies, I mean, you have to be really brave to do that.
You have to be really brave to do that. I think it's misleading, but an individual who's brave, and I've highlighted her several times, I want to highlight her again. I think Mary Barr doesn't get enough credit for what she's doing at GM. She's transforming the company. She has the Ultium battery inside of GM. You have BrightDrop, which is rocket and rolling on delivery vans, and you have Cruise. What all the Ultium division has, what the BrightDrop division has, what the Cruise division has, they all have one thing in common. They have really great management that's focusing on building and scaling a product. And Mary, keep going on the strategy. At some point, Wall Street's going to reward you because you're going to be proven right. And I want to stay on the Wall Street theme here and dive into Waymo. There was a really interesting Bloomberg intelligence report from September 2022. And I want to highlight this piece that they did about Waymo inside of it. And I quote, Waymo may be able to generate about $5 billion in revenue by 2025 if the company's software can help reduce cost per mile by 25% versus the use of driver-operated ride-sharing vehicles, according to our calculations. Unlike Alphabet's cloud segment, which continues to have a negative operating margin, we believe Waymo may not require high sales and marketing investments to drive adoption, end quote. That's a very bullish prediction by Bloomberg Intelligence. In my opinion, that's to get that $5 billion in revenue. Waymo's going to have to license their technology. Do you see Waymo and other AV companies perhaps licensing their tech in the future?
I think they publicly, both Waymo and Cruise, they publicly mentioned about licensing their technology. And it kind of makes logical sense. So I'm not sure about Waymo's projections, but Cruise, I think during the GM Investor Day, there was a presentation about what they see the future of adoption of autonomous vehicles is going to be. And they explicitly put the third-party operators in there. And they say, hey, in the next 10 to 15 years, we want to have 1 million full autonomous vehicles on public roads, which is, by the way, is nothing compared to, the all automotive real estate out there in the world. And I don't think you can centrally operate a fleet of 1 million vehicles. I think PepsiCo is the largest fleet, and they have like 80,000 vehicles that they operate, and that's as big as it gets. And, in my opinion, that the licensing play is going to be crucial to scaling this. Now, the question is, in trucking space, it's pretty well established how this whole thing works. You have the truck owners, operators, you have the fleets, and they will be able to buy a truck and they can subscribe to the Waymo driver or Rover driver and put it in a certain route, and then it just goes, right? Makes total sense. In the robotaxi space, it's a little bit tricky because I think it's not yet clear who's exactly going to be the operator, but I can tell you that I think it's going to change very soon. I personally know 5 companies that are probably going to pop up in the next year and a half that are just going to be focused on owning and operating autonomous vehicles across different use cases. There's going to be new companies. And another thing notable, every time you go to, let's say, when you get a rental, you go to Avis, Hertz, or the like, just how they have their separate garages and like how they have, all the, like you go in here, you go out here, you do the check, and everything is like very well thought through logistically. And like, just imagine for a second, the same thing within Hertz or Avis happening for autonomous vehicles, right? Just the vehicles go on a mission, ride around, come back. And I do think that we're going to see car rental companies probably making a statement in the near future as well. And then there could be new companies appearing that might be, just owning the autonomous vehicle real estate to let operators like Transdev or Keolis operate those things and have those hyper-localized services in different parts of the country. So I do believe that licensing is important. And the reason why those AV companies operate their service today is because they can take that experience and then show to their operating partners, hey, here's how you do it. Here are all the tools that you need. We've done it ourselves. This thing works. This thing scales. Have fun. I do believe it's going to happen. Timing is flexible. I would say we're probably going to see the first license in place in the next 5 years. But, that's fast enough, in my opinion, for the licensing play.
Okay, so let's say a hypothetical Waymo and other AV companies decide to license their tech. What are the implications on insurance, and who's at fault for a crash or a claims incident?
Oh, that's when insurance is going to get really painful. So, it's twofold. So now you have a company that developed the software, so they have the product liability exposure, and now you have the operator that's responsible for day-to-day operations, including teleoperations. And when an accident happens, the first thing that you need to do, you need to figure out what was the cause of an accident. And you need to bifurcate. Is it the developer issue or is it the operator issue? And that's where we start. And we believe that when it comes to insurance is also going to bifurcate. There's going to be coverage for the operator, it's going to be rated appropriately, and there's going to be coverage for the developer. And we do see Koop as the company that will be able to provide either or both. And we also think ahead about what tools and software we can build to make the claim evaluation streamlined, so we don't have to spend like millions and millions of dollars on arguing who was at fault and, on collecting the data and the like. So I got to tell you, we're already seeing that in the off-road space when you have companies that, let's say, develop agricultural machinery and a license there to their customers and operators, and they like throw liabilities as a hot potato onto each other. And we clearly see how a good insurance product that we already have, by the way, can eradicate all of that friction. And the same is going to be true for the on-road space, even though in the on-road space, the requirements is going to be much higher because it's public roads, it's passengers, and there are also some regulatory implications.
Koop's prepared. You're really prepared for what's coming down the pipe.
We are.
Insurance is expensive. And you mentioned there's tight capacity in the market. How are you thinking about the economics of autonomy?
Oh, that's a hot topic. When I was at CES, I got into some interesting conversations about the unit economics of autonomous vehicles. And there are projections out there, some of them very bullish. If you look at the ARC research, I believe they're like super aggressive on the autonomous vehicle space. And I think the consensus is that at some point, the cost per mile for an autonomous vehicle is going to go below 25 cents, maybe even below 15 cents. And today, the cost of personal ownership is around 70 cents per mile. And that includes the vehicle itself, depreciation, fueling, charging, insurance, maintenance, and the like. So lots of people say, well, autonomous vehicles are never going to scale because it costs them, many dollars per mile to operate this vehicle, and they're never going to be profitable. And I do not totally understand that because, well, if you look at all the components that go into the autonomous vehicle, the cost just falling down exponentially. Look, you went how many years did it take us? Probably 3 years to go from a $50,000 LiDAR to $500 LiDAR, right? It's just insane. The same for compute. Those NVIDIA chips that they keep shipping is like they go 100x every other year, and it's just exponential. But in terms of making money, I do not think that autonomous vehicle companies will make money from like Uber makes money today by charging you a fare. They're going to charge you a fare, and it's going to be, relatively, it's going to be cheaper than the ride hail. But as soon as you get into the vehicle, there are so many things that you can provide to the customer in terms of the customer experience. They're going to make it just absurd margins. And sometimes I draw the parallel of as soon as you get into a Waymo vehicle, for example, or cruise vehicle, it's like logging onto the YouTube. You're going to experience like so many things that the company is going to make money from, and you're not even going to realize it. So prime example would be advertisements. So let's say you go into a Waymo ride. Let's say it's a 10, 15-minute ride from point A to point B somewhere in San Francisco. And, you go in there, you're all by yourself, and you have a screen. And on that screen, you have, whatever the ride, whatever kind of the current status of the ride. And then you just have ads that you cannot skip. And, you can mute them, but you cannot turn them off. And you just kind of look at them. And if you look at YouTube rates, I think they charge like 1 to 3 cents per view or something like that. That's how much they generate. And if you log that passenger for 10 minutes and you show them a bunch of ads, that's probably going to make you, a couple dollars per mile, which is going to many times break even on your cost of ride. And, it's just one example. It could also be like, okay, you can come up with subscription services, you can come up with infotainment services, and all of that is going to generate revenue for an autonomous vehicle company. And I don't think people realize that AV companies are not going to make money from charging you for going from point A to point B. They're going to make money from everything that you look at, that you hear, and that you touch in the vehicle. And that's when the margins are going to be really, really high. And, the analysts that you mentioned that projected $5 billion, I really hope that they took into account the ad revenue that Waymo can generate. And, by the way, they can go to YouTube, and YouTube knows everything about advertisements. So I think when you take that into account, that makes me even more bullish on the autonomous vehicle space. And unit economics are going to be there. It's just going to be different unit economics compared to Uber and Lyft.
You hit the nail on the head. It's the in-vehicle experience, the in-vehicle commerce that's going to generate the revenue. I have this theory that I'll run by. I'll love your opinion on. The most profitable autonomous vehicle operator, not developer, operator, be Louis Vuitton, Moet Hennessy, LVMH, led by Mr. Bernard Arnault. They have Belmont hotels. They have Cheval Blanc hotels. They're going to integrate autonomous vehicles into that experience. And, by the way, when you're riding in that AV, you can buy an exclusive Louis Vuitton handbag. You can buy an exclusive Laura Piana thing, a blanket. Let's not forget, they own Dom Perignon, so perhaps you can have a Dom Perignon in there. All suddenly, you're pushing at a 42% profit margin on that on a $15,000 experience. That's a very profitable ride. That's a business I want to get into. That's in the margin expanding business. That's in the experience business. That's where luxury is going to play a role in this. And that's what's not talked about a lot in autonomy. Autonomy will become a huge growth driver for the luxury market. What do you think?
I agree. I think you can also think about what kinds of vehicles you can develop for that particular experience. You can think about exclusive shopping 100%. That's going to be big. Like right now, you can only get certain Nike products only on the mobile app. And they even have sometimes limited time where you can buy those things. And I think there was a huge growth driver. Same with the autonomous vehicles. So, and I think the LVMH group is going to be really smart to do that. And they're probably going to pave the way for other companies, private corporations to do that. And I wouldn't be surprised if, let's say Las Vegas, in the future, Las Vegas is going to be just fully autonomous, and you're going to have competing autonomous vehicle service, MGM providing you with this, or whatever, some other hotel chain providing you with that experience. And absolutely, and that kind of it's the same as the ad argument. It's just another experience and another set of margins that you tap into. And to me, it's very obvious. Not to a lot of people, though, in my experience.
I had a lobbyist from Vegas on, and we talked about gambling in Vegas, where when MGM, Caesars, they'll send an autonomous AV to pick you up at the airport, and you're going to start gambling for them, and they're going to get that revenue. You're 100% spot on of the in-vehicle revenue, the in-vehicle experiences. You have an incredible grasp on where we're going with insurance. And Sergey, as we look to wrap up this insightful conversation, what would you like our listeners to take away with them today?
So I'm a big proponent of the autonomous vehicle space. I absolutely think it's the future. It's a force of nature, as I believe Kyle Vogt said in one of the interviews. So I would really encourage people to get smart about the space. And the best way to get smart is just give it a try. Go to, when you're in Vegas, try Emotional. When you are in Phoenix, try Waymo. In San Francisco, try Cruise. Give it one try, and you'll understand that there is no coming back from that. When you have a much safer, really calm, perfectly clean vehicle that's all to yourself, it's your own private space, you're going to realize that. And honestly, every time I get into the Uber or Lyft today and I have a human driver, I'm like, I'm trusting my life to this person, and it's incredibly dangerous. I know people don't think about safety, but I do. And I have this genuine desire to spread the autonomous vehicle to as many people as I can. And follow our progress with Koop Insurance. We have lots of things coming up, and we want to make a dent in the autonomous vehicle universe by taking care of the insurance components, and hopefully we'll be very successful with this. So follow us in the journey.
As Sergey says, give an autonomous vehicle a try. It is the future. It's safer. The future is bright. The future is autonomous, and the future is Koop Insurance. Sergey, thank you so much for coming on the Road to Autonomy today.
Thank you, Grayson.
Thank you for listening to the Road to Autonomy podcast. If you've enjoyed listening, please rate, review, and subscribe on your favorite podcast platform. Want to get in touch? Follow us on Twitter at Road to Autonomy or email podcast@brulteco.com. The Road to Autonomy is produced by Brulte & Company. The views and opinions expressed on the Road to Autonomy podcast do not necessarily reflect the views and opinions of Brulte & Company. The content discussed on this podcast is for informational purposes only and should not be taken as legal, tax, investment, or business advice.